Disney is a magical place with so many revenue streams, so why are they running at a loss? Well, you will find out shortly. The Disney stock has been stagnant for years. Then it had a big jump in stock price when Disney Plus came out, then crashed to the ground during the Rona and rose to new highs. We will look into the main reason Disney is down for its streaming services as we look into Disney Plus. Then we will discuss the theme parks and the film sector of Disney. Once we get some background, we will look at the financials of Disney to see if Disney is a potential buy. Remember to smash the like button and subscribe to the channel to get more of the videos you love on Financial Guru. First, we'll look at the Disney streaming service. Television may never be the same again. After 4 years of planning, the Walt Disney Company on November 12, 2019 finally launched Disney Plus, the much anticipated streaming service that marks one of the Burbank company's biggest gambles to date. Disney has spent more than $3 billion on the technology, with a lot more to come and content, in an ambitious bid to take on Netflix at its own game. The service boasts a deep library including movies and TV shows from the Pixar animation, Star Wars, Marvel Studios and classic Disney fare. Disney is approaching Disney Plus with all guns blazing. They want to be one of the top choices. Consumers seeking entertainment. The new product represents a shift in Disney's business strategy and potentially another blow to the traditional pay TV bundle. It has been so important to its business, taking a big bite out of the revenue of Disney's cable sport empire ESPN. Disney Plus faced glitches on launch day. You probably already guessed why, due to the overloading of numbers on their platform. The new streaming option could entice more people to cancel their pay TV subscriptions, further jeopardizing the health of an important profit center and the fees that cable and satellite TV operators pay for the program. Nearly a quarter of US households are expected to drop traditional TV subscriptions by 2022. The number of people in the US who stream videos through subscription services is expected to reach 300 million in 2023, up from the 182.5 million from 2019. Disney faces formidable competition from rivals including Netflix, which has a big head start with over 207 million subscribers and is spending about 20 billion on content. But Disney's chairman and chief executive Bob Iger believes that the company that forges strong relationships with consumers will be the one that survives the digital migration. His legacy will be judged in large part to the success of Disney Plus. With the launch of Disney Plus, we're making a huge statement about the future of media and entertainment and our continued ability to thrive in this new era. The 96-year-old company pushes into direct-to-consumer entertainment was a primary driver of its biggest acquisition ever, the $71.3 billion purchase of Rupert Murdoch's 21st Century Fox. That deal closed in March 2020 after a bidding war with rival Comcast Corp, resulting in months of haggling that ultimately drove up the price that Disney had to pay for the Fox asset, including control of streaming service Hulu, the National Geographic Channel, and the ownership of The Simpsons, Lady and the Tramp, which debuted on Disney Plus when the streaming service launched in 2019. Disney Plus is a key test for one of Iger's chief lieutenants, Kevin Mayer. The hard-charging executive who is seen as a potential successor to Iger has managed the development and rollout of Disney Plus. Mayer was named the chairman of Disney's direct-to-consumer and international division in March 2018. After years of serving as a business development and corporate strategy executive at the company, he led key acquisitions including Marvel Entertainment, Lucasfilm, and BAMTech, the previous little-known firm that provided technology backbone of Disney streaming efforts. Meyer wanted to make sure the technology could handle tens of thousands of simultaneous online orders, and even tweaked the shape of the plus sign in the Disney Plus logo that greets users on screen. We've worked extremely hard to create a service that is second to none. Thousands of Disney employees have been perfecting the app design and navigation, marketing initiatives, and creative content for the service since September 2019. The company had been testing the app with consumers in the Netherlands, which provided an early glimpse of the audience makeup and the popularity of shows Marvel Agents of the Shield, the Disney Channel's The Sweet Life of Zack and Cody, and for toddlers Mickey Clubhouse were the most viewed programs. Iger believed to use the word excited would probably be an understatement. I feel great about what we've done here at Disney. Disney Plus to potential subscribers, Disney has waged, in the words of the app content and marketing president Ricky Strauss, biggest synergy campaign ever in the history of the Walt Disney Company. Its promotion push spans theme parks, cruise lines, city buses, Disney retail stores, and on its various TV networks including ABC, ESPN, Freeform, and FX. The ABC show Dancing with the Stars dedicated an episode to Disney stories and characters. Iger even appeared on the radio show On Air with Ryan Seacrest, touting Disney Plus as the answer to today's consumer dreams. The company is hoping to lure subscribers with its first live-action Star Wars series, The Mandalorian, a new High School Musical show, and the multiple Marvel series. The Mandalorian is Star Wars to the core, a safe entertainment blockbuster. The Mandalorian shows off impressive visual and sci-fi action. The show, helmed by Jon Favreau, cost at least $100 million to produce. With the success of Mandalorian, the second season was made at Disney Plus. Disney Plus is focused on making the app the prime streaming home for all Disney, Pixar, Marvel, Star Wars and National Geographic content. Virtually all of Disney's classic vault will be available on the service, along with Fox's movies such as Avatar and 30 seasons of The Simpsons. In the first year, the service will have 25 original series, more than 10 original movies, and special 7,500 TV episodes from the Disney-owned catalogue and more than 500 movies. Disney Plus cost is now $7.99 a month, or $80 for a full year, which is substantially less than comparable offerings from Netflix, $13 a month for its most common plan. AT&T HBO Max, $15 a month. Disney was very smart in building a platform with a price point that wasn't too high. The price of Disney Plus will put more pressure on Netflix not to jack up its prices. Analysts have speculated that Disney will sign up to 5 to 10 million in the first year with customers for Disney Plus. Company executives expect 60 to 90 million customers globally by 2024, but by 2021 that had already been obliterated. Disney Plus, which reached 103.6 million subscribers of April 3rd, 2021. The Mouse House flagship streaming service packed 8.7 million global customers in the most recent quarter. As of March 9th annual shareholders meeting, the company boasted that Disney Plus had surpassed 100 million subs. The continued but slower growth for the Disney Plus came amidst the service's first price hike. In the US, for example, the Disney Plus package went up $1 to $7.99 a month as of March 26. But it also came on the heels of a blockbuster fourth quarter that saw Disney Plus grow by more than 20 million subscribers. Amid the Rona conditions, the company has said that Disney Plus should be profitable within 5 years. Very solid financial profile to embark on this evolution, trading some profitability in the short term by investing heavily in content and technologies to support the platform and add scale through subscriber growth. But Disney has struggled in the past with tech-related ventures. Its pricey acquisition of YouTube Network's Maker Studios fizzled. As the online game network Playdom in 2001, Disney shut down its Go.com portal, acknowledging that the site's service and content were subpar. Disney has taken pains to reduce the chances of anything like this happening with Disney Plus. We've been approaching this pretty critically because we want this to be right, Iger said. Another challenge is the perception that Disney content is geared for little kids and their parents, while the service will not contain R-rated content. Executives said the offering should appeal to a so-called four-quadrant audience, the male, female, young and old. It's incumbent on us to market it the right way to emphasize that it's not just for kids. Maya said because much of the audience will be families, Disney wants to simplify the user experience. In addition to buttons dedicated to its 5 key brands, Disney Plus organized its content in categories, including the nostalgic 90s movies, classics from the vault, and musicals. For fans of Beauty and the Beast, Disney Plus also offers the 2018 documentary about songwriter Howard Ashman and the new Christian Bale show Encore, which reunites cast members of real-life high school musicals. Some analysts and industry insiders worry that Disney Plus and competing services could accelerate cord cutting. Disney, for example, is offering a bundle of stream services, Disney Plus, ESPN, and Hulu. To consumers, the startup costs and losses from Hulu have weighed on Disney's earnings. Hulu will become the landing pad for ABC and FX shows. Disney direct-to-consumer segment, which includes Disney Plus, ESPN and Hulu, lost $1.81 billion in the fiscal 2019, causing a 17% drop of its profits to $10.44 billion in fiscal 2019. Disney has since added Star to international audiences. Star is a free tier within the Disney Plus for subscribers in Europe, Canada and New Zealand. It will be fully integrated into Disney Plus. It will be accessible as the 6th brand tile in the app. Essentially, this will carry a number of shows from Disney's other non-main franchise brands. That means shows from FX and movies from the 20th Century Fox will be available to stream. People will be able to choose if they want to watch shows with higher age ratings. The company is also introducing Star Plus to Latin America subscribers. The new streaming service will carry Disney's owned entertainment for its top brands, but will also carry ESPN and ESPN Plus content. This is one of Disney's biggest pushes into making a streaming service carry linear sport content. Disney has just recently released Loki for all their Marvel fans to great reviews, so it will be interesting to see how long before profitability comes. The Walt Disney Company is a worldwide entertainment company. Let's look at the four main branches of Disney. The company operates in four business segments: media networks, parks experience and products, studio entertainment, and direct-to-consumer (DTC) and international. The media network segment includes cable and broadcast television networks, television production and distribution operations, domestic television stations, and radio networks. This is one area where productivity is slowing down as cable TV slowly disappears. The company parks and experiences include theme parks, resorts, Disney's cruise lines, and Disney's Vacation Club. We all know how the theme park and cruise line sectors of this business is going backwards. The theme park and cruise lines are closed or at limited capacity in numbers. Also, with no bums on seats, all the food stores, merchandise stores, and jewelry stores are all closed, or only getting little revenue in comparison to the past. But sadly, the workers have lost their jobs, so Disney has saved money there. But thankfully, national rollout of the vaccine has been pushed around the world, so hopefully the world will open up again to full international travel by the end of 2022. The studio entertainment operations include motion pictures productions and distribution development production and licensing of live entertainment events and music productions and distribution. Theatres have been continually been closed or at a limited capacity. People are still scared to go and watch a movie at the theatre. Merchandising in malls, shopping centres, Walmart, etc. Disney are missing out a lot of revenue in their theme park, leaving only streaming services as their main money maker at the moment. It's direct to consumers. Business consists of subscription services that provide video streaming, general entertainment, family and sports programming. The company's international channel produces local programs or acquired rights from its domestic studios and from third parties. Now we understand a bit more about the business of Disney. Let's look into the financial. Disney revenue has been very slow the last few years, from 2016 of $55 billion to only an estimated $58 billion only 5 years later. It's little profit for a company so established, but we have to remember they have been hugely affected by the Rona, only their saving grace being Disney Plus, which is also costing the company plenty of money in making new content, so even that segment is not profitable at the moment. Revenue is down 25% on the sector medium, and gross profit is also 20% down on the sector average, so struggling to make money currently. Let's now look at net income. This has been a disaster for Disney, and the stock is at a premium price, so it doesn't make sense to me. When they launched the stream service Disney Plus, they wouldn't believe that the timing was so perfect to help Disney to at least have some cash flowing coming in the business thanks to its subscriptions. With the slight price increase in the subscription, that extra revenue coming in helps Disney grow. P/E ratio, wowza, is around 74 for a company that should be maturing, but they are trying to reinvigorate themselves, with Disney Plus being a game changer. But I worry they need to find a new niche product to expand more. Maybe a 4D world could be on the agenda, where you get a real life experience without actually having to ride the amusement ride, so a lot less space to find for land and less maintenance cost. Disney shares outstanding. This is no good for you as an investor, as you own less of the company, from 1.5 billion shares outstanding to 108 billion in the space of a 2-year time span. But considering they issued more shares to raise more capital to stay afloat, they are doing a positive thing for the business by not going into more debt but issuing more shares that gives them more capital to spend to stay afloat. What has happened to the dividend? It has crashed and burned since the Rona. There's hope that the dividend will return, but you might be waiting until the late 2022 when everything is finally opened up again. In terms of a value stock, the current price of over 170 is outrageous. Whether you can get 100 again for you to have a safe margin of safety is doubtful, but possible, and if it did, it would make it more enticing to buy the stock. On the growth spectrum, Disney is also dropping currently, but if Disney Plus continues to develop and improve its quality shows, it can be a growth play into the future. Will they make more theme parks in Europe and even down under in Australia? Would entice me to buy more of Disney stock. My future predictions, I would set at $300. It's not a crazy number, but we'll need to see a return of the dividend and profits on the bottom line for the stock to break the $300 barrier. Thanks for watching Disney Stock Analysis. Remember to smash the like button and subscribe to the channel so all of Mickey's friends can celebrate. Seek professional advice before buying any stock or cryptocurrency. I'm off to Toontown to meet up with Mickey and get a photo with my favourite characters. I may pop in to see the Frozen musical. That was a really amazing experience I had when I visited Disneyland. Bye bye, my friends. Have a lovely day out there as we make dreams come true for me and you.